policy statements. He also heads Agents Retail Unit Trusts business. And of course, he's from now the UAP Old Mutual Financial Services docket there. Mr. Zach, you're most welcome to the program.
Thank you so much, Anthony, for having me. Good afternoon, viewers.
Yes. When I look at a CFA, first of all, what comes to my mind is someone who has really done a lot, in terms of financial, knowledge and, getting to all this experience. How has it been for you as an individual?
Yes. Now, they always said knowledge is power. So if you want to know, I previously, before working in Uganda, of course I'm Ugandan, but before working in Uganda, I was working in Kenya. And while I was there, I looked at the investment environment. There's so much happening there, infrastructure projects, they're doing roads, they are expanding their city, the port is busy, there's so much going on. So I said, what is the best way I can be a part of this from a professional point of view? So I decided to go and dig into the world of investments, and that's where I went to study the CFA program, which is Chartered Financial Analyst. So it trains you on being a professional, an investment professional, the same way you would have an accountant doing SCCA or CPA. Here you are learning how to make projections into the future, because every project that you go into, there have to be projections about where we are going. An investor wants to know what the interest rate is going to be. Someone wants to buy shares. Which shares do you recommend me to buy? Which is the right investment philosophy I should have? I am starting a project. Capital budgeting is very important. I have to look and see how to determine how profitable a business is even before getting started. Now, these are a number of things which people think are easy to come around, but the truth is there are professions which are designed to give you the right skills to do that. So that's the reason why I had to go get a lot of education as far as this is concerned. And then that's the reason why I'm now in the fund management business. Yeah, so that's just a brief about how we got here.
Talk about CFA. I don't see many of them in Uganda. I don't know if there is a training hub or some sort of school where you can train from. Because all I know is mainly people get maybe a Bachelor of Commerce, Bachelor of Economics, and then they go abroad for the CFA. Do we have that training?
Yes. Now, before this year, for the last, I think, 20 years or so, the CFA program was a self-taught program, self-read. So you're able to register to do the exams, and then after doing the exams, where would you do the exams? Leave the country. So the closest test center to Uganda was Kenya. So you have a number of people who would travel to Kenya. Personally, I also sat in Kenya, but then you can travel to South Africa, you could travel to Ghana, you could travel to Egypt, you could travel anywhere. So that was quite costly. But with effect from next year, the test centers will also be in Uganda. So it's going to really cut on the costs. And so a number of students will be able to sit here within Uganda. And now we have even moved from paper-based testing to computer-based testing. So we shall be able to have multiple sittings here. And that is actually going to cause an increase in numbers, because if a student is deciding whether to do a course or not and they're thinking about the travels, it really affects their ability to take a course hands-on, because you're thinking about that cost. But with effect from next year, we are going to be able to have test centers here, but then we are actually so if you want to also do the CFA course, you can also be able to go to Match Uganda and be able to enroll. And after that, the beauty with it is that the curriculum is the same across the world, not just across Africa, not just across America, across the entire world. So it's the same exam. So the professional designation, which is CFA, would be the same as someone who's in the US, as someone who's in China. It is exactly the same intensity, the same weight. So I think with this change with the exam centers, I am very optimistic that we are going to increase that number, because we are almost about 30, and that's really a small number. But we look forward to imparting the skills as you come.
Yeah, that's interesting. And now today we're talking about the Unit Trust Fund. And I understand as UAP Old Mutual, you have a certain docket where you deal with financial services, and the unit trust is one of those things you look at. To a layman, to someone hearing the unit trust for the very first time, how can you define it?
Okay. Before I actually define, some people may be saying when people hear UAP, they think insurance.
Yes, they
so everybody says, is this another insurance product? Now, UAP Old Mutual is a group of companies. We're actually 4 subsidiaries in Uganda. 2 of them are insurance. That is general insurance. Then we have life insurance. Then the third company is UAP Properties, because we have a property that is in our business park. Then we also have a building on Kimathi Avenue. So we are the 4th company called UAP Old Mutual Financial Services. So what we are is a fund manager. So a fund manager company that's been licensed by Capital Markets Authority and also UBRA, Retirement Benefits Regulatory Authority, to receive money from the public to invest in a number of investment options. So we invest money for a number of pension schemes. We invest money for private individuals. We have a brokerage arm, because we're also able to trade if you want to buy or sell shares with any listed company. We are able to do that. So as far as the unit trust is, look at it more as a retail product. It's not a corporate product where you have to pass through a company to meet trustees and so on and so forth. Here, I am an individual. I have 100,000. I want to invest it. So you'd come to us and you'd ask us for guidance on how to invest that money. So if you came to us, then yes, we would recommend a product called the unit trust. So in short, a unit trust in short is 3 words: collective, investment, scheme. 3 words only. So collective means that you get money from a pool of different investors. Who are the investors? An individual. You're looking at an investment club. You're looking at an association. You're even looking at a family. We are not registered officially, but we are 3 brothers and we want to put money together. So we say, come and we can give you this service. So collective, it's a pool of money that is collected from a group of people. Of course, we are licensed by Capital Markets Authority, and then invest this money with low risk investments. By that we mean regulated products. So that's where the regulator comes in and says, we're like a referee in a match, that hey, this is people's money, but these are the rules of investing. So that's the reason why actually a number of people have come to us, because they know when they come give us money, we are restricted on how to invest it. So they say invest it, but with commercial banks, invest it, but with central banks, invest it, but with Uganda Securities Exchange through buying shares. So we are restricted as to how we invest this money. And that is what has built a lot of confidence over the years, because someone knows worst case scenario, my money is safe. And that is what is of utmost importance. Safety. You know, Ugandans, if maybe you could, maybe the question which you would ask is, why is that issue with the savings culture? People do not have that culture in Uganda. I think it's because of the history Ugandans have gone through. If you look at the past, if you remember what happened in the 80s, there was a devaluation of the currency. Zeros were cut off. So people who had money, if people who had investments in terms of cash lost value, you know, and people who had money in assets, say land, retained their value. So if you talk to a number of old people in this country and you say anything about savings, they say that if once a snake bites you, you'll always jump when you see a stick. So that's the reason why a number of people are cautious, especially the older generation, that how safe is the Uganda shilling. And that's why many people prefer to keep money. Or if there's an option, they will always go for a foreign currency. Yet the foreign currency rates are so low, yet you'd earn more in Uganda shilling. But because of that history, many people are always cautious and say, no, I'd rather put money in land, even if the cash flows are low. But over time, with stability of the economy, over time, people are realizing that, hey, keeping money in local currency is not a bad idea. There are many options that are there. And so the unit trust is one of those options that are available. Yes.
Well, yes, you talked about the saving culture being very, very poor. Could it be attributed to the fact that we are a low-income earning economy? Is it our GDP? What has hindered people from saving, and especially saving for investment? Because we have a very serious problem. Those who are saving for their stomach. Yes, they are saying, I'm keeping this money aside because in the future I may need to buy food. But now we are looking at people who are saving while investing. Though that's now a very, very small number. If you look at statistics and all, what do you think is the problem? Where is the gap?
That's a good question. Of course, it depends first of all on the demographics you're looking at. Because when you ask me that question, I'm asking myself, why wouldn't an old person save? Why wouldn't a middle income person save? Do they have the same attitude towards saving? Now, one thing you'll be shocked is that most of the middle class people now are involved in some kind of saving now. We are not talking about the old people who have retired, because you see, when you're retired, now I'm just depending on pension, if I was fortunate enough to have, or remember what the culture was in the past. I am raising up kids so that they take care of me. So savings was not a culture of the older generation. In fact, people's greatest investments, which is still the case, but more or less in terms of investment, was let me invest in my children, and they're the ones who will take care of me in my adulthood. But right now, people have realized that, hey, you know, because costs of living have gone so high, you have the culture which is coming in, especially in the working class. Many of them are saying, we have to be part of a group somewhere. Because with these costs here, we have to start a business of some sort. You'll be shocked that actually, if you look at regional statistics, you'll realize that Uganda has the highest number of startup businesses. So everybody has realized that, hey, our salaries are not enough. In the future, there's retirement, and my pension won't be enough. So the question is, how do we put this money to work? But on top of that, business is always failing. You see, many people have tried to do businesses remotely, and I can tell you, much as Uganda has the highest number of startups, it also has a very high business rate. The number of businesses which close are so many. So you have a situation where people say, let's save. They have been banned by businesses. Now they're saying, what safe options are there? Now the financial literacy is increasing. People are saying, we want to save through investing, but in safe investments. And that's where things like unit trust are coming. So to answer your question, which I've partially tried to do, you see the history of where we're coming from has impacted. We did have parents who brought us in the culture of saving, but I'm talking about people who are in their late 30s. But now if you look at people who are much younger, 20s, people are learning the importance of putting money together. I have a number of students who save from the university, and they're saving small amounts of money because the culture is now building. Almost everybody is part of a group of sorts, either in the church, either an investment club somewhere, either a family. Everywhere I go, because I can also tell from the number of families I talk to over the weekends, this culture is beginning to show up. And I think it's just going to grow up, keep growing and growing and growing. Yeah.
Talking about our culture, which we need to break and start to rebuild again. When we look at seasonal investors like Warren Buffett, who have made a fortune out of investing, they say when things are going bad, like we're seeing right now, price inflation, central bank rates are going up. We're seeing exchange rates, flying in all that sorts of direction. He says that is our time to invest. That is exactly the time we need to come up and invest. Do you think we should start thinking like Warren Buffett, saying, instead of giving an excuse saying, you know what, oil prices are high, we should now become more aggressive investors in such economic times? Thank you very much.
Now, Warren Buffett is one of my, I would say mentors. By mentors, I mean someone I've read about. He's called the Oracle of Omaha. For those of you who don't know, Warren Buffett is someone who has made money through investing in businesses, private businesses. Looking at a small business, he sees there's value. He's actually called a value investor. So he gets this business, turns it around, changes the board, appreciates the value and sells it. Then he has also invested in the stock markets and so on and so forth. Now, one of the things he always says that he was blessed to have been born in the right country, because it's a country which had stock exchange in existence. I mean, there was a lot of financial knowledge. He grew up with a father who was also encouraging him to move in that direction, which I would say is a similar environment to how I'm raising my kids. Not that that's how I was raised, but that's the environment, because I have my child who's asking me, Daddy, what does the stock market mean? Just that exposure. Daddy, what does a bond mean? Because he always hears me talking to clients on phone. So now, the moment you grow up with that with that inquisitive mindset, and also have a look at, let us look at the economy, look at foreign direct investment. Did you know over $1.6 billion was sent from the diaspora last year. Now, for those of you who don't understand what this means, there's more cash now than there was in the past. I will not really talk about GDP. I always say that figures, that's the fastest way to lose guests. So I don't talk about figures, but what I'm just saying that everywhere you go, there is an opportunity to create value out of something. And that means the question to ask is, how do we capture this value? And that's why you're looking at people who are trying to get into the financial markets, because people have realized that if we keep money, if we try to invest, first of all, business takes a lot of time, a lot of resources. Anthony, you would want to have a business, but guess what? We're in office now. So why don't we get this money and give it to competent people who are qualified and people whose duty from 9 to 5 is to study the markets? You don't need to know about bonds. There are people who are qualified to give you that information. It's just like you don't have to be a doctor in order to get treatment. You can just go to a professional. So that's the reason why I'm saying it is so important for you to now look for professionals who are going to give guidance at a very low fee, and you're going to see your wealth growing. Because before you think of creating wealth, you have to think about making it. You have to think about have some source of income, and then you have to put it in the hands of people who, like Warren Buffett was saying, in the hands of people who are qualified to meet his standard. Then over time, you'll watch those businesses grow one by one.
As we wind up this session, we would like to know what has been like the key factor that has led to influence the growth of these markets. For example, the Uganda Security Exchange incorporated in 1997, and we're looking at the Nairobi Stock Exchange in 1954. It was there. And looking at their stocks, they are way beyond what we could imagine. What do you think delayed us, and was it the right time? And do you think we are growing at the right pace at the moment?
Anthony, I can see you're trying to make me do a post-mortem, but I do not want to. Of course, there's history, but there's also where we're going. Historically, of course, while there was peace in Kenya, we had wars and so on and so forth. But I don't want to deal on focus on that for long. But the question is, where are we going now? Because that is what is most important right now. Because a child who's born now is not thinking about the 1970s or earlier times. The child now is saying, my father grew up, there was no war. I am here, I'm looking for ways to move forward. So basically, when you look at where we are now, first of all, have you noticed that there are so many inflows coming from foreign markets into Uganda? And investors will always look for a return. Have a look at oil being discovered. Now, it does not matter whether you're not in the oil business. Everyone in this country is going to be impacted in one way or the other. Everyone. Let me give an example. The mere fact that oil is going to be found, there's going to be, of course, there are two sides of the coin, but your currency is going to be impacted in one way or not. Whether you like it or not, the value of your currency is going to change. So whether you like it or not, of course, we need service providers, we need so on and so forth. But the point is that there are factors which affect you, whether you like it or not. Now, Uganda is in a very, very strategic position geopolitically in terms of the region. We're a food basket. Now, even if we have not reached our full potential, a point is going to reach where there are people who are going to rise up and find a way to deliver proper commodities to the region. Because where you look at, we are centrally located. If you look at Singapore, for example, in the Asian market, it was centrally located across the region. You see, and I look at Uganda being something similar as far as Central Africa is concerned. There's so much we can export to DRC. There's so much we can export to Rwanda. There's so much, just by our location, we can even become a hub. So irrespective of where we have come from, the point is, I believe there are so many young leaders who are going to come up, who are going to take up these opportunities, and it's just a matter of time. We're just a little bit slow in terms of, exposure, but I can tell you there are quite a number of young people who have traveled, who have seen things, and they have a passion to change their environment. I mean, you're looking at financial technology, you're looking at young people developing telemedicine. These are young people who are developing, have companies that are creating real value. You're looking at, so when you look at the mindset, the creative mindset of the young Ugandans, I see so much happening in the technology space, and that has a trickle-down effect, even to the 1 to 1C, because you're looking at at a trickle-down effect, but real value being created from the middle class. I think that is where we are going the next 20, 30 years, which I'm more interested in than where we're coming from.
Wow. Thank you very much, Mr. Zach. We're still talking about the unit trust, though of course looking at the history and so on, our saving culture and so on. And of course, Mr. Zach, a CFA, by the way, is here to break it down for us. We're going into a short break. When we return, if you've heard of the coupon rates, if you've heard of the interest rates, also collective investment schemes have rates of return. And he's going to talk a little bit more about that and more. Don't go anywhere. We'll be right back.